Hello, everyone. Welcome back. Hopefully, you've already watched the first part or explanation of Chapter 1. This is simply a kind of tour through the Form 1040, which is also found in your textbook. But this is what you would find if you did a Google search on the IRS or a search on the IRS website. Lots of ways you can find it. It's actually a fill-in form you could actually use if you so choose to file your tax return, if that was what you wanted to do. And you see, you choose filing status up here, put name and information all about that, that sort of thing. Whether you are, and we'll find out why all of this goes on here a little bit later, whether you are blind or you are older or over 65, and then dependents, those who you support, that sort of thing. And then, like we talked about in the slides, your wage income goes on line 1, interest goes here. Notice there's all these little kind of side explanations that can sometimes guide you. If your interest or dividend income is over $600, then you're supposed to attach a Schedule B, which then shows detail about what that is, what that income is. So they can track it back to the reporting entity. So if you don't have more than $600, you just put, and you got $40 of interest, you put $40 here. There's no place to put who it came from or anything like that. But if you have over 600, they want to know where it came from so they can match it up and make sure that that's what that entity reported as well. Social Security, IRAs, pensions, all that stuff goes right here. You get your total income. So here's our first reference to Schedule 1. So remember, the schedules support the 1040. So here's what Schedule 1 looks like, and you see that Part 1 down to line 9 is additional types of income. So if you have any business income, you're going to need to use Schedule 1, and you can notice that this schedule sends you to another schedule, which is where you will actually calculate the amount of income from your business, Schedule C. We'll talk about how that works later. So you have this Schedule 1 that supports the 1040, but this schedule is supported by other schedules as well. So back to the 1040, you got your total income, you get your adjustments to income, things that can be subtracted, taken out, not included in income, all right, based on the law. Now, some exclusions from income don't ever get put on here. Okay, and others do but don't get counted. For instance, just a little bit of a confusing thing. Tax-exempt interest. This is interest that we'll learn later is by law not included in income, not taxable, usually from local or state governments. You put it here, okay, but you only put your taxable interest over here, the part that is taxable. So if you earn interest on your bank account, that's taxable. You earn interest on bonds you bought from the state government, it goes here. Now you report it, but it does not get included in adding this up. Similar idea with, like, say, Social Security benefits. Under the law, never is all of your Social Security benefits taxable. Only part of it is. So the whole amount goes over here, and the taxable amount goes over here. They're wanting to see that you report all of it, that you knew you got all of that based on receiving that information. But this is a calculation. This depends on calculating how much is taxable. All right? And dividends is a similar idea. Little different concept because all ordinary dividends are all qualified dividends are ordinary dividends. Okay? So in this case, instead of being taxable exempt interest is different than taxable interest, these two are actually related. So the amount of ordinary income might be 500, and the qualified dividends would be 400 out of that 500. Okay? And because of the way that the law works, those dividends are not excluded, they just tax at a different rate. So don't let that get too confusing. We'll cover that in more detail when we get there. But just an idea why there's two columns. All right. Here's that second reference to Schedule 1 to the Part 2. These are things that you can subtract out of your income. That part that you pay for those things is not taxable or is deductible from your taxable income. All right. Then there's some that get their own line, and then even the standard or itemized goes to Schedule A, which I haven't even showed you. We'll talk about much more in Chapter 5, another schedule, but not a number, a letter. The letter ones are much more involved than the number ones. That's just kind of a rule of thumb. Here's reference to Schedule 2 as we move into page 2, and we're talking about the tax we need to pay. And you'll see that if we screen over to Schedule 2, this is where additional taxes other than income tax. So yes, we are focused on income tax, but on this report, we're actually looking at some other taxes that are very closely related, and we will cover not all of these, but a few of them, the ones that come up most as we go through. So hopefully that gives you a feel for how the 1040 works at the end, okay? And you see this recovery rebate credit. We're going to talk about that in the next slide when we get back to our other next podcast as a change for 2020. But I just wanted to point that out. And then you're going to say, what do you want to do with the money? Are you going to get it to send me a check or put it in my bank account, all that kind of stuff, or do I have to send it in? And then you sign the return saying that this is what really happened, and it goes in. We're going to talk a little bit in the next one about a person who signs this return as a paid preparer, what responsibilities come along with that in our next podcast and review of the slides.